That's me. Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a big move. Big money, big move.
Hey Rahul, can you hear me?
Hey KT, what's going on, man?
Nothing much, dude.
What a day to start
What a
2022.
day, yeah.
Unreal, dude. This is your favorite type of moves too, the big tech.
Yep.
How'd you play
Yeah,
today? Did you play any calls?
dude,
What'd you do?
yeah. We had positions in AMD. We had some in Amazon. So I was kind of disappointed about how Amazon started. Um, Many had positions in Tesla 1200 calls, which kind of blew up. And yeah, I mean, it was crazy.
Yeah, it was insane, dude. I mean, Tesla was flat out obvious. You saw the record numbers. I think the close was pretty strong too. Touched $1,200. I think
It
Sawyer
closed
put.
above 1200 actually.
Oh, did it? Okay, yeah.
Yeah.
Sawyer put up a tweet saying that this is the most it's gained since it split in terms of dollar value, $143 pop, as well as market gain,
Hmm.
143.8 billion, which is crazy. And then of course Apple hits 3 trillion, which is amazing. I don't know how you feel about that one, Keith. I know you just sold your position like a couple weeks ago.
I'm totally fine with that, Rahul. Like I've been riding Apple since it hit half a trillion, and
Yeah, same. Yeah, I
and
think I got in. That's when I
people have
got
been
in.
calling the top on Apple for a long time.
I
I'm not.
remember, I vividly remember when I bought it in 2015 and it had split that time 7 to 1, $700, and it went 7 to 1. So it ended up coming at a post split after it popped a little bit to like 130 and it fell to 90. And people were still calling it overvalued. I think it was at 350 billion maybe. And people were just like, what's next? The iPhone market is saturated, blah, blah, blah. And that was actually one of my first investments. And I was just like, I use the product daily. I love it. The company's doing well. It's
Yep.
probably the best consumer brand in the world. I mean, here we are 6 years later. Pretty impressive.
Yeah, I mean, like when iPhone 6 released, also people were calling about this is just a super cycle. This won't happen anytime again. iPhone 10 released again. They said it's a super cycle. Now like iPhone sales are not going down at all. Like we are. There's a lot more penetration that Apple is getting into, especially into the India market, into Southeast Asia, China and USA obviously being the top two. There's quite a bit of penetration into Europe also that they can get into. So and Apple is listed in Russia as well, Russian exchange as well. So might as well penetrate market. So
Yeah,
like
exactly. People don't realize that Apple has a long runway left in India, probably because the opening up stores there has been a lot more complex than people, may realize, just because of the way the government has it set up, and also just the complexity and the way the land is there. Right, it's just not easy to kind of get things up and running.
yeah, I mean, like the thing is, like when China was seeing that, like the lower middle class going into the higher middle class and the economic gap kind of reducing. Sorry about that. Economic gap kind of reducing. That's exactly what we are seeing in India also, where the lower middle class is like the educated class is going to increase, and like people are definitely looking for a higher standard of living, and then there comes the brand values and things like that, and that's where Apple has a lot of penetration to go into. And mind you, India is a huge Android market. So there's quite a bit of runway for Apple there. But again, I sold my position purely because like it's been a long time, and like I had a huge massive position building, and I at some point I had to book profits, and the profits that I made in 2020 2021 were specifically like they were hitting my price targets from 2025. That was my vision for 2025, and I was like, okay, when I get my chance, I'm just getting. And That's exactly what happened to me with Qualcomm also, Rahul. Like, in 2018, when everybody was like, Qualcomm is not just a chip company, it's going to be a lot more IoT, blah blah blah. And I was like, holy, I still hold some of my shares from Qualcomm, and I'm finally seeing some returns in 2021, but 2021 and now in 2022. But I'm still holding it. But you go back to the yearly chart and you'll see a super elongated flag where, with respect to inflation, if you think about it, my position is almost dead. But now I'm kind of happy about it. But that's exactly what I fear with these huge positions that I'm accumulating and which have grown over time. So that's the reason why I kind of liquidated Apple as well.
Yeah, man, totally fair. I have a bunch of tweets pinned above as well. We'll get to Luka in a second. Our next Spaces is on January 6th. Brian Feraldi, I put up the screenshot. Apple hitting 3 trillion. I have Impersonator actually, guys. So if people want to help report him, that's also pinned above. Um, Also, some Tesla tweets as well. But yeah, I'd love to get to. I also see TSDR. TSDR, welcome to come up if you'd like. Luka, what's going on? You want to give a recap of the daily briefing?
Yeah, I can do that real quick. So today we covered in the briefing, we covered those Tesla deliveries and production numbers, which they beat significantly expectations there, and they actually broke their previous quarterly record when it comes to deliveries. So that was pretty awesome. So of course you saw Tesla moving to the upside significantly. We also saw quite a bit of volatility when it came to yields in the bond market. Of course, most of that surrounding the expectation for those 3 rate hikes here in 2022. So that is something to pay attention to. We also saw spending on construction here in the United States increase just slightly. It actually missed the expectations by economists, but it wasn't terrible. You still saw an increase there. I believe the exact number on that, taking a look at my notes, construction spending 0.4% in November, and the expectation was 0.6%. So not terrible, but not fantastic. We go through analyst calls here, and we had a sizable upgrade on PayPal to outperform, and that call was pretty much on valuation. Basically, BMO saying that PayPal at this point the sell-off has gone too far, and that the name is too cheap. And speaking of that name on a technical basis, I really like what it did today. And actually what it's been forming. So if you take a look, really since the low at 179.15, it's been forming up a little symmetrical wedge there at the bottom, and today it broke up through the top of that. So I'm eyeing that. I like the fact that it closed above its 913 and 21 EMAs, so possibly we're seeing a bottom there. Moving on from that, we also had a top pick call from Piper Sandler on Qualcomm. Bank of America upgraded C Limited. Goldman Sachs naming Microsoft a top 2022 pick. Barclays upgrading Wells Fargo to overweight. Oppenheimer reiterating Coinbase is outperformed. That's been another one of focus for me as well. To touch on that real quick, it continues to get sold. It's sitting at 251. One point of interest I'm watching is that 253.8 mark, which it did close below. And I'm looking for that to reclaim its near term 913 and 21 EMAs. And then rounding out the analyst calls, we had Gunningham named Nike a top 2022 pick, Goldman Sachs naming Marvell, AMD, and Micron top picks for 2022. And then, of course, Loop naming Best Buy and RH top 2022 picks. And then to round out the briefing, we covered MicroStrategy. They picked up another 1,914 Bitcoins between December 9th and December 29th, which brings their total Bitcoins held to 124,000. That's one hell of a Bitcoin position, worth roughly at an aggregated acquired price of $3.75 billion. But that was the briefing. That was really what we covered today. That's really been the news affecting the markets. And I'm paying attention to yields because at the moment, the bond market seems to be indicating that we are going to indeed see those 3 rate hikes here this year. And then one final note, this week, we're supposed to get that December employment report and minutes from the Fed's last meeting, which could create some volatility throughout the week. But that was the briefing.
Awesome. Yeah, no, the yield is definitely something I wanted to touch on, and I'm glad you brought that up because this is kind of what happened last year. For those that remember, bond yields were trading closer to zero almost. I mean, it was like a 70-point move in terms 70 basis points, right? So let's be clear on that. But a 70 basis points in about, I don't know, it's like through end of December through February, which is a pretty big spike in long dated yields in that duration of time. And fixed income, if people don't understand it, it is the biggest market in the world. I mean, you have the U.S. dollar, as well as the amount of money that's moved in fixed income trading daily is in terms of volume is massive. So and for just from like a just growth investing 101, right? You If you have these yields continue rising, it affects growth multiples because the cost of capital changes. So something to definitely keep an eye on while we celebrated Tesla and Apple today. You don't want those rates to get too out of hand because it can certainly put more pressure on some of these growth stocks that have revenue that's longer dated and not as close or here to stay as some of these other companies that are a little bit more stable and kind of the big tech that we look at, which is like this is another point of the market I don't really understand. Is a lot of people say, well, wait till big tech falls, that's when we'll get a real correction. But like, if you have record amount of liquidity on the sidelines, you have hedge funds that need to manage positions, and growth stocks have taken a hit already and are going to continue to be volatile. Where the hell does asset manager put his money? He's going to naturally put it into big tech, which is, I think, a little bit more safer based on their revenue as well as their valuation. Except for Tesla, you can argue is pretty richly valued. But even Apple, yeah, it's like trading as what 35 P, which is historically high for Apple. But what do you do? Like, what are you going to do with that type of money? Do we just expect big tech to naturally correct for no reason because they're going to continue delivering, right? In terms of like, it's not like these companies' balance sheet has weakened or their products have suffered. It's like they're doing their best pretty much ever. So I don't know if you guys have any thoughts on that. I don't really fully agree with that sentiment of, oh, the big tech has to correct because that's the next step for the market to correct. It just, I don't know, it seems too obvious to me. What do you guys think about that? And if you have any questions, anyone in the audience, feel free to request. We'll be taking them shortly.
Well, one thing I'd like to know is we have all that liquidity, and also a lot of people in the United States, the large majority, when they invest for retirement, they go into these large funds, or in some way their money's allocated to these large funds or to the indexes, and the heaviest weighted names within the indexes are those mega cap tech names. So you just almost have a constant flow of money flowing directly to those names. Typically, I take a look at Apple, I take a look at Microsoft, I take a look at Google, Nvidia, I take a look at these, but really those Apple, Google, Microsoft, I take a look at these mega cap names, and what I see are companies that are generating a lot of cash. And at the end of the day, when you're generating that much cash, it's almost like you can just become an investment machine. These companies, you can tell from their past that they are not limited anymore to a specific industry. Apple is pushing into what? VR now. They're also wanting to push into auto. You take a look at Google, and they're pushing into a whole bunch of new areas. Amazon's very, very similar. These companies are not just, an e-commerce company. It's not just a phone company. It is a company that has this huge network into a vast amount of industries, and those vast amount of industries are growing. So at the end of the day, you see Apple hitting $3 trillion, and there's still quite a bit of liquidity on the sidelines. And personally, I hold Apple. I'm going to continue holding Apple because I really don't see where these companies underperform, especially if we go into an environment where we have 3 rate hikes. I think at the end of the day, your FANG names and your names that tend to hold up better when you end up moving into these tightening environments, I think your FANG names are going to be a location where people go to, almost like a flight of safety. And we've seen it when this rate hike fear or this tightening fear is inflamed. You see these mega cap names, specifically Apple, one of them, you see straight out performance, and we've been seeing it. It's looked at as a flight to safety for some reason. It just seems to be the market. I'd also like to know, throughout 2022, I'm going to be looking for positive free cash flow whenever I look at an investment. I think that's going to be a major theme because companies that are losing money, I really don't think are going to perform the best, or at least quite a bit of money, are going to perform the best throughout this year as they have in the past, especially if the Fed stays on course and we get those 3 rate hikes. But that's really my view. These companies I view as extremely strong. Their balance sheets are impeccable. Their management teams are phenomenal. Almost all of them have a huge past and a great record when it comes to management. And you also take a look at where they're going, and there's quite a bit of new growth verticals for a lot of these companies. So a lot of new verticals these companies can still expand into, and they have the cash to do it. So for example, Facebook, they're investing tens of billions of dollars into this metaverse theme, specifically really what it is virtual reality. And they're doing that because first off, I believe they see an opportunity, and secondly, they have the cash to do it. They're a mega cap company that has an insane amount of cash on the balance sheet. They can generate that cash. And they have the ability to pretty much go in there, hire the best of the best, and make things happen. And I think these companies continue to do this. I think personally, and I've been thinking about this, I think we're in a new type of economy where these companies reach such a size and they generate such a large amount of cash each year, and in part because of their products. For instance, Facebook's product is mostly digital, so their margins are going to outperform those of, say, a Cisco name that's, for instance, like a steel company. So their margins are phenomenal, also pretty darn solid compared to a lot of other industries. I personally think that we're in this new environment where these companies simply continue to outperform, they continue to lead the pack, and then you have all of these other companies try and be the next Apple or the next Microsoft. But I really don't think that happens. So really what I'm looking for this year, and what I think you want to look for, and all these FANG companies have it, is pretty darn solid free cash flow. And these companies have that. So that is what I'm looking for. I think these companies continue to outperform, and there's a lot of reasons behind that, and I just covered a few of them, and maybe KT has some thoughts.
Yeah, I mean, I 100% agree with you, Luca. Like, I never invest in a company that is losing money. That's one of my main thing. And I started off in my 2022 portfolio today. I just bought like 500 shares of Amazon, 3,500 shares of Facebook, and this is basically me thinking about like how things would perform in the next 1 year to 4 years time frame. That's what I'm placing my bets on, basically because of the massive liquidation that I had from Apple late last year. So I definitely agree with that point. But there are a few companies, a very select few, which are doing really, really well, right? Like you don't really have to go with the only the big tech, like in the names of Apple, the Fangman plus T. You don't really have to go after them, because I think what happened with Amazon last year is going to happen with Apple or Tesla or any other company this year, and it is a healthy thing. It is not going straight up. It's like building you're constructing a building without pillars. That's essentially what it is. If you're like trying to go straight up, and that's exactly what happened in 2020 and 2021. So I am handpicking certain stocks, like who are getting into these innovative spaces. One being Facebook, the second is Amazon. Like Amazon is not really getting into that innovative space, but for me at least. But like I love the technical setup on Amazon. I very rarely have seen such a setup go break down to the downside. So that's partly the reason why I'm going after Amazon. Some other companies that I'm going after will be like ASML. That's another company that I'm looking for. There's Pure Storage that I'm looking for. Like there are certain companies I'm doing my research on, and I'll slowly get into based on how the Fed will react to all these monetary policies and things like that. Specifically, the main question that I think many will ask Powell, but when he said taper in December, where was the taper? I didn't see any taper. So did they change their stance from the last time they met? Nobody really knows. I think that's something that he will be asked a lot and will be grilled a lot on, and I would want to know answer for that before I get into lower tier companies, like what Luke just mentioned. Google, Amazon, Facebook, all these companies, they are so deep rooted into diversifying their where they are located at right now. So that's where I generally feel my money is safe in. But at the same time, I'm also looking for that growth in my portfolio, where I'm like, if inflation is sitting at like 5%, I want to gain at least 10% over the year. If SPX is going up 4%, my portfolio, I want it to be like around 8 to 10%. That's the level that I kind of gauge myself with, like staying ahead of the herd kind of a mentality that I want to develop through, and that's partly the reason why I go into big tech. Again, I'm not saying Apple will just flag and it will be flat the entire year. There will be trades, like you can do day-to-day trades. You can do swing trades. It can go down to 170, come back to 180, go back to 175, come back to 190. But like when you're thinking about risk reward, and in terms of your returns of for the money that you're putting in, and when you think about your risk and what is the reward that you're targeting for, that is where you have to select your companies wisely. And to Luke's point, like when I'm investing money, when I'm not actively trading something, I never put money into something that is losing money at the moment. Like if they have a negative EPS, I'm not going after them at all. So that's a hard truth that I kind of follow, like a hard rule that I kind of followed over the last 10 years. The other rule, which is very very weird to many people, is even with Amazon and Facebook, I added only half a position. And if you and in my Discord, I was also saying, like. This is just half a position, and I'll be adding the other half when Amazon breaks above 35.30 or 35.50, or the and I'll sell some at X amount of price or something like that. And most people don't like doing this, but I usually, when I'm investing to something, I usually try to average up than average down, because I kind of like playing with the other instruments as options, where like over the last 10 years I've been selling puts on Apple and I've been making a killing. And my average was just kept going down. Like I have a few friends that that have their Apple, the position was actually negative, because of the number of puts that they kept cycling through over the last 10-15 years. So all in all, like, definitely agree with what Luke said about Fangman plus the position.
Awesome. See, we have a bunch of speakers join us, so I'm happy they're able to come on. What's up, Stock Talk? What's up, Jeremy Lin, TSDR? Pro Trader, did you have a question? I see your hand is raised. Pro Trader Mike? All right, guess not. Jeremy Lin, you there?
Yeah, hey Raul, how we doing?
What's up? How's it going, man?
Good, good. Yeah, I mean, I think what Luka and KT just talked about was spot on, and that sort of the narrative we saw today with the bond market kind of catching a bid, and a lot of these high FCF companies, also following along with that was awesome to see. When I just look at down the list of like the top FCF companies, we got Apple, Google, Microsoft, Amazon, UNH, Facebook, Chevron, Intel. All of these, most of these specifically, performed pretty well today. Two things I'm watching for the rest of this week is I know we have the semiconductor meeting, which we saw the industry perform pretty well today. Two tickers in particular I saw have extremely bullish flow that were underperformers for the sector in 2021 were Intel and TSM. I think you might see some continuation for this industry, and some of these laggers, kind of maybe outperform some of the, some of the top performers from last year, just due to the fact that they are trading at lower multiples, but we're kind of still in the secular based growth for the industry where demand is a lot higher than supply. And there were a couple analysts that came out today and said that these bottlenecks might not even free up until the second half of this year. So this notion of the pent up demand for the semiconductor industry, I think, will still be a reoccurring theme, especially in the first half of 2022. And yeah, I know KT mentioned Facebook. Facebook looks pretty good here. I mean, 24p for a big tech company that just brought an entire new segmentation to their business line with this whole metaverse theme. Excited to see the Oculus numbers from Christmas time, because just from a anecdotal perspective here, 8 out of every 10 of my friends got an Oculus for Christmas, so that's one I'm watching for sure.
I don't know if you saw the chart. Year over year, they grew like 100% in sales.
I actually did not, but that would be a cool one to look at.
Yeah, I saw one yesterday. I forget where it was. I didn't tweet it out, but yeah, I think I saw something. Literally said the growth was insane.
But yeah, kind of just the cherry on top for me today with this whole big tech free cash flow companies catching a bid while the bond yields were also spiking was that what's the industry that benefited the most from compressed interest rates over the past year? Buy now, pay later, right? Because they leverage these lower rates to increase their margins for when they give out these small loans, and we saw these companies get absolutely hammered today. So don't get me wrong, one shift in sentiment or tone from the Fed and like these companies, how they work on a day-to-day basis, their range is incredible. So I'm interested to see actually this Thursday we have comments from one of the Federal Reserve Board members, Bullard, and he actually wasn't a voter in 2021, but he does have a vote in 2022. So it's going to be interesting to see how this new perspective aligns with the narrative Powell's been portraying. Two things. One thing in particular I'm really watching is if they have any new data points on Omicron, and if it's affected the economy. One thing that stands out to me is like travel cancellations over the past couple of weeks. Just due to like staffing not being able to meet demand. But clearly today, the airline stocks kind of rejected that thesis. So I think that's going to be interesting to see if he has anything to say on that. But yeah, that's kind of my take on this first trading day of the year. Definitely excited to get going with 2022, and we'll see how it goes.
Yeah, for sure. No, thanks for joining in, Jeremy. And you can feel free to stay on the panel. I see we have Stock Talk. I definitely want to hear from him on EVs in general. He's one of probably the smartest guys observing and studying the EV space. I think he played the Tesla call today too. But just overall, any insights from Tesla kind of trade and just like what you've seen the deliveries over here, Stock Talk? Any comments? Partially, yeah. You are breaking up. Are you there? I think you are there. Just might be a Twitter.
Let me try.
Let's give it a second. I think Stock Talk might refresh or reboot. Did we lose KT? What was going on with Twitter? Okay, Luka, remember how challenging it was with yesterday?
Oh, it was so challenging.
It sucks because he was crushing, man. With some fixed income knowledge he was dropping. Let's give Stock Talk a second. Maybe I'll go to TSDR. TSDR, what's going on, bro?
Hey, how's it going? How good can you hear me right now? I'm in my vehicle.
Can hear you fine, man.
Oh, cool, sweet. No, it was a good start to the year. I told myself for the first week or so I'm going to be pretty conservative on my trades. As you guys know, I primarily day trade. So I was taking it pretty easy today. I was really enticed by Tesla, and I'm like, yeah, dude, I'm slapping some 1,200 calls right at the open. And, I'm like, man, it's already up $60. I'm just going to hold off, see what kind of happens. And I ended up not trading at all. And I kind of regret that looking back, just kind of analyzing or reviewing my day. Tesla is one of my favorite stocks just because of the sheer range that it has. Like I just said, it's up $60 to start the day. So I just kind of reviewed my day. I kind of regret not trading that. I regret not trading Apple today, as it was. I like to trade the leading stocks that are carrying the rally. And I didn't trade any of that today, so I'm a little disappointed in that. I did recognize a theme early on this morning that the airlines were performing very well and that retail stocks were performing very well. Last week I said that Gap and Nordstrom, JWN, and GPS, I think they're going to have they're going to perform very well in January. That is something I'm going to continue to watch. Gap looks very intriguing. I think we've got room up to $22. I'm not looking at the chart just based off memory, so but I think there's room up to $22 to kind of fill that gap that occurred in late November, I believe it was. Airbnb, I traded really well today. Like I said, I recognize that travel theme and tried to find one. Airbnb is one of my favorite ones in the travel sector to trade because I think it necessarily trade with the airlines. It doesn't trade with the hotels. It just kind of trades on its own, but it does still respect the theme of the sector pretty well. So I saw a late opportunity and jumped on that, and it worked out really well. But these first month, it's try to recognize. I'm trying to recognize the themes that are going to be, prevalent in the first half of the year because there's always those themes that continue on. Like last year, we saw energy perform really well. At the beginning of 2021 as well was the beginning of meme stock, stuff, and that ended up, being a whole thing for the year. So I'm kind of just sitting back, trying to recognize themes. So I'll be prepared, and we'll have a repertoire, armory to work with for the year, and yeah. Oh, I also wanted to note. I talk about this often. Bottoming formation or base formation, and I think that chart pattern is going to be incredibly important in 2022. There's a lot of stocks that have been beaten down. I don't need to go into the names. I mean, we all know these names, and I think there might be some really good opportunities to trade out of these base formations, whether it be China names, some sports betting names, some of these electric vehicle names that have been beaten down, what have you. So if you're in the audience and listening and you're an active trader, I'd recommend finding some YouTube videos on base formation patterns and try to recognize that and jump on some opportunities early on. I'll continue, but I'm in the car. I might chime in with a comment here or there. I feel necessary. Thanks, Raul.
Yeah, for sure, man. 1,200 Tesla calls was probably the best trade of the day, I'm guessing. BN Cruz, I think you've been on for a while. Did you have a question? BN Cruz, are you there? All right, guess not. Looks like we lost KT. His phone shut off, so hopefully he'll be able to join back. I know Stock Talk said he was having some technical issues, so he's going to try to jump back in. What are we looking at for tomorrow, Luka? Anything from your end or Jeremy Lin?
Yeah, so I take a look. I actually have just started I always run down through the markets every night after the close. I go back through everything. Make that a habit, by the way, to everyone in this space. Running through the markets, checking the indexes as well, seeing where they're at is an amazing habit. If you do that every single night, you'll wake up and you'll completely understand the market, or nearly understand the market, much better than you would have if you do not. So make it a habit. But either way, take a look at SPY and QQQ, checking out the daily charts here. I like what I'm seeing. I like the fact that SPY and Triple Q both bounced right off their 9 EMA today, which is a pretty positive note for me. Actually, on SPY, we closed with a green hammer right off the 9 EMA. Like magic, almost, it feels like. So I like what I'm seeing there. And then I also take a look at Triple Q, and I see a very similar price action. I see that it's bouncing off that 9 EMA. I like it. Closing above that $400 level that has seemed to act as a resistance for the past, just about a month and a half. So I very much like what we're seeing there. I take a look at some individual names of note. I take a look at Ford. My, oh my, the outperformance on Ford today. I think Tesla was just the catalyst to get that sucker up through that little base building out there.
And Lucid. Lucid, nice move.
Yeah, I mean, the EVs all moved off of this Tesla move, or at least anything related to that EV theme. And speaking of Lucid, on this chart, I didn't even realize I had this charted, but down into that 36.1 level, it was acting as support really since 12.8, and it was forming up a descending triangle, and it has actually broken to the upside of the descending triangle and closed over the 21 EMA. So I'm looking at that, a break tomorrow over, it looks like right around 41.65, I think would indicate possibly some more upside there. But just to round out, I either watch NVIDIA, AMD, Celsius. I really like what I'm seeing with Celsius. I take a look at that 6-month daily chart, and what I see is it looks like a short-term double bottom. So it bounced off of this $61 level, or right around there, twice. And in between those two times, it bounced up to the 72.5. It's now up over that 72.5 level, retested it as support, and now it is starting to bounce off of, with some increasing volume, off of the 21 EMA, as if it's going to move back to the upside. So a move over 75.5 on Celsius, and I think I like that sucker long, but I'm waiting to see a little more volume come in on that one. And then AMAT and DraftKings are two I'm watching. PayPal's another one on watch. Airbnb, and then some smaller ones. One I am watching that's really not in my typical purview is Mosaic. I'm watching that because it's more it's in that agriculture area, and you take a look at what it's forming up, and it's forming up a nice cup. It's coming into its 9 EMA, and today, or at least the past two trading sessions, it's bounced off that 9 EMA, and it looks like it's ready to make some more upside. So I'm watching that one as well. A break over roughly $40.20, and I think that sucker moves higher, possibly up to that high over the next few weeks. But that's really what I'm watching, and so far, I really like what I saw today. Both candle on Triple Q and SPY when it comes to bouncing off that 9 EMA back to the upside after a few days of grinding to the downside on some lower than average volume.
Nice. Looks like we have KT back as well, so I'd love to get to him as well. If anyone has any questions, you can feel free to request. We're happy to take them. The topic, KT, was anything you're looking at for tomorrow, and Jeremy Ling, you can chime in as well.
Yeah, for tomorrow, I think Spy QQQ they did pretty good. QQQ especially closing above that 400. 401 barrier that was pretty impressive actually. So uh, tomorrow I will be the setup, like I know I've been pounding on this for quite some time, but this setup on Amazon is definitely life changing. If we can get that weekly contract when it actually breaks out, you are having yourself with you're just holding on to a 20x or a 25x trade, definitely. Like that's a massive support, the bounce that we saw on Amazon today from the daily chart, and closing right near right near the 20 EMA on the daily. It is just massive. Like my level on Amazon has been 34 for any small account holders to get into a position, but that 34 level, that's the one that I'm watching very very closely. The others that I'm watching is Baba is one that went lower to 116 today and bounced back really strong. That's another one that I'm looking for. Chips look pretty good. AMD, Nvidia, after that breakout on the weekly wedges that they had last week, that was pretty good. Invalidating the shooting star setups that they had. That basically squeezed out a little more of the shots from them. Especially because there is CES coming up, and AMD, Nvidia, all these companies kind of they release some kind of a technology kind of thing there, and it usually props up the premiums as well as the price. So those are on watch as well. Interestingly, today Walmart did not show any kind of strength, and Home Depot is one that got slammed, absolutely slaughtered. That's something that I'm looking at also. But all in all, as long as that 10-year yield is that TNX is going up like that, I won't be touching any of the ARC and ARC components except Tesla, of course. But like most of the growth sector is something that I'll be hands off on. So yeah, that's my list.
Nice. Jeremy Lin, what are you looking at?
Hey, yeah. So just from a flow-oriented standpoint here, KT, you should check this out too because it's definitely a little intriguing to me. But usually, SPY and QQQ have the most volume out of specific chains intraday. But today we saw some incredible volume on a couple of the Cisco call chains for January 21st. I know they do have a dividend date coming up pretty soon, so that could potentially be a catalyst for this. But definitely watching this one here just due to the fact that this options activity is extremely unusual to say the least. Maybe they have some news coming pretty soon, and they do kind of build off of that narrative we were talking about earlier. With companies that have good cash flow balances and are trading at a suppressed multiple to the broader indexes right now, especially when you look at where like QQQ and the Nasdaq is trading right now. So that's one I'm watching. Another one I'm watching is to see if we have any continuation on the move TSM made today, leading into their earnings. Their earnings from last quarter were pretty dismal, mostly due to some supply chain constraints, especially over in the Eastern Asia segmentation of the world. So that's another one I'm looking at, and then one that was kind of on my top watch list for today, just kind of due to the fact that it was pretty beaten down from a bunch of institutional tax loss selling, was PayPal, and they definitely did get a nice reversal. We might have seen a little bit of a base formation there, so that's one I like too. It cleared some key levels today over 194, so maybe a little healthy retest of that, and then some continuation would be a nice turnaround for that name that underperformed the market in 2021. So yeah, kind of those three are some of the ones I'm watching. Yeah, chips do look pretty good here, so we'll see how those go. And yeah, definitely China names as well. Those were other highly sold off names. It's very unpredictable what's going to happen with those tech news, but we are seeing liquidity injection from the Chinese central banking system. So potentially more international investing prevalence could occur over the next couple of weeks in some of those names. So yeah, that's kind of a short list for me.
Yeah, we were talking about the liquidity infusion of China yesterday as well in our spaces, and did a good job covering it. So definitely a good point there. Again, if anyone has any questions, happy to bring you up and take some questions live. Let me see if I can find yesterday's space, so I can just pin it here. We'll post it on our YouTube as well, but this way you can. Yeah, here it is. Yeah, so I just pinned yesterday's space, which was pretty solid. We ran a few hours, covered a lot. BN Cruz, I still see you're here. Did you have a question? I guess not. Ninacha, what's going on?
Yeah, hi Raul. Thanks for the opportunity and thanks for hosting such an amazing space here. I heard some of the beaten down names and I couldn't stop myself from asking this question. But does anybody on the space or in the speaker panel have any thoughts on Roku? That's definitely one of the beaten names in 2021, strongly beaten down rather. So, any thoughts on that?
Roku today got an amazing news which said it is the top OS seller in TVs in the US. So that might add some short term upside on Roku. The chart looks extremely compressed. I really like that. We have to see some expansion on it. I'm not saying it'll only go up, but it definitely we can definitely see some nice moves here above 230 236. I think we can target around 250 256 271 on Roku. 270 plus is something that you can target for a couple of weeks out on Roku if we kind of see the expansion towards the upside. But if we lose the downside at 222, I think we will see 200 and under. So that's your risk reward on Roku right now. But all in all, it's a great company. They have executed really well in terms of how they have operated. I'm yet to see this launch pad on the 9 and 20 EMA shaping out to the upside. And once it does, I will start scaling out at the 50 EMA and then then hit my price target at 270 plus. So that's how I would approach this stock.
Thanks a lot for that, Katie. And just a quick one on this. Another question built on that is, in 5.5 weeks time frame, there will be there is an earnings announcement there will be an earnings announcement from Roku. So, what is one thing that in my case, I've always been watching their ARPU, like ARPU, like all this while. But in your opinion, what is one of those important metrics that you will be monitoring for Roku?
Ad revenue, definitely ad revenue.
Okay, thanks a lot, appreciate it.
Thanks a lot, Nina. Thanks for coming up. Hopefully that answered your question. And again, we do these spaces pretty often, and these are the types of questions. Again, we can't really give buy, sell, hold advice, but we can happily share some research and thoughts on companies. So I think we can go on to the next question. Incognito manuscripts.
Yes, I'm happy to be here. My question is to the experts here. I'm actually a novice at this. I would love to know which resources I can use to become a better trader. And my last question is, which app are you using to trade? Thank you.
Yeah, so I can take this one because we've actually answered it in depth. I want anyone to give you a brief answer because that's a very detailed answer. So what I'm going to do is, we actually had a Twitter Spaces that went into this in depth. So I'm pinning the entire thread above. And if you want to go on that thread, I would go to the tweet that's on 12/12. So it's a third tweet. It says options trade and the markets. I pinned this tweet above so you can find it there. It's on YouTube. You can hear all the different tools that some of these traders are using, as well as some hedging strategies and techniques. So I'd encourage you to look at that Spaces. It's recorded on YouTube, so you can listen to the entire thing. I've pinned it above, but Katie, Luka, you want to give an answer briefly? Go ahead.
All right. Firstly, when you want to trade, think about your risk reward perspective. That's the first and foremost step that I would take. And based on that, choose the instrument of your choice. When I talk about the instrument, is do you want to do stocks, just buy shares, buy shares, sell shares, or things like that? Do you want to go with options, like buy options, sell options, or do you hold a bunch of shares and you want to sell a bunch of puts or calls? Think about the instruments that you would want to use, and then once you decide on your risk reward and the instrument that you want to use, go after uh, you know um, a good trader out there on Fintuit. Like there's a lot of traders that are there, and try to adopt their strategy, and try to adopt just one strategy. Just because someone says, like, oh, Elliott Wave theory kind of predicted this move to this particular price target well in advance before everybody else, don't try to jump into Elliott Wave theory if you're getting into support resistance levels uh, from a particular trader. And then if someone else says something else, don't jump into something else. Try to stick to a particular method and methodology. Try to practice it and perfect it, and then try to increase your scope. So that's how you would want to approach your trading and your trading style. The other aspect of trading is mostly it's not like I would say this technical analysis kind of thing is about 20 to 25% of your trading. Most of your trading is psychology. So this, where does your psychology come through, is when you are when you know your risk management, where your risk management skills come into play. So try to understand that as well. So these are certain things that you would want to. So, okay, I think someone is unmuted. Can you please mute your mic, Ben Cruz? Yeah, thank you. So you want to go after that psychological aspect of trading as well. And I would recommend a couple of books. One is Atomic Habits. The other is Trading in the Zone by and by Mark Douglas, and he also has some YouTube series and things like that are going on. But I usually like the book. So that's about the market psychology. Coming to your applications, I use. I use Trend Spider for charting all the tickers, and usually like the weekly for the price targets, daily for scalping and the day trading, and like I look at the 5 minute chart and things like that. And I use for the flow tool, I built my own over the last 3 years. But then I also really love using Traditix, who have a bunch of algorithms and algorithmic charts and things like that, and it's really fascinating as to what they kind of do. The last one is I would say, whatever you do with respect to your trading, the first 6 to 8 to 12 months is all about learning. And how you learn is journaling your trades. You always have to journal your trades. Try to see where your strengths are, where your weaknesses are. Based on that, start doing expand your knowledge into what kind of a trader you are. And if it's not working out, try to talk to someone who is more experienced, and like say, hey, I tried this, it's not working out, and what these are my mistakes. Where do you think I can improve on my weaknesses and things like that? So those are kind of a strategy, or the steps that at least I followed when I started trading. So hope that helps.
Yep. And a couple things I'd like to add. I've also wrote a thread on this, so I've pinned that above as well. It's literally called Lichotomy Spaces. The general theme of questions have been around what do I look at in the markets or before investing in a company. So there's quite a lot. I'll try to summarize this thread. Obviously, KT touched on doing your own diligence and understanding, why you're investing into a company. I ask a ton of questions before buying. I have a tweets pinned in that thread as well. Building your conviction into why you're buying this company or what makes you excited about this company. But I think before we even go into all of that, I think it's important to really understand what type of style you want to follow. Are you a trader? Are you a day trader? Are you a swing trader? Are you an options trader? Are you a volatility event trader? Are you someone that's looking for moat gaps and trading those? Are you looking for sympathy trades? Are you a long duration investor? That's pretty much where I would categorize myself. KT, I think, is more of a trader, but also the account size you're managing, right? It really depends on the type of how much money you're putting in, how much risk you can manage. Again, don't follow on Twitter. I think building your own thesis out and following your own research, and then using Twitter as another tool is definitely a good resource, but nothing beyond that. But as I said, building that conviction, moving averages, something I think everyone on this page should be looking at. We always talk about the 200-day moving average. I know Tony loves the VWAP, which is a volume weighted average price. So you can literally anchor that from a certain date and time and see how the volume of that price is over a duration or kind of over a span of time, and kind of look at that as an indicator, and that gives you a good idea of where this stock is in terms of its moving average over how many ever months, and it gives you an idea of if you're buying it at potentially the right time or not. Again, it's not perfect, but it's an indicator. Look at institutional ownership, right? That's another big metric that I think people don't realize how important that can be, right? You want the stock that you're buying to be backed up by as many institutions as possible, because that gives it a lot more support than kind of a random stock would. As well as the macroeconomics. We covered this very in depth yesterday. We were like, I think the whole space, the first half of it was macroeconomics driven. So definitely keep an eye on that stuff, right? You have Fed coming up with a lot of different things in terms of quantitative easing slowing down, rate hikes, your new variants, you have midterm elections coming up next year, you have the refinance of federal debt, you have inflation numbers that come out, you have Build Back Better, which might rise up, like again, in terms of if it might happen or might not. You have FOMC minutes that come out, you have the schedule for that, so you can follow that as well. As well as trying to understand the different volatility events that there are within the stock market, right? Whether that be expiration every month, the quad witching or OPEX or index rebalancing. So there's a lot of different things you can look at, but I think the first thing is to identify the type of investor trying to be, how much money you're going to manage, what's your risk management technique, figuring out the tools and resources that work for you, whether that be YouTube, TrendSider, Twitter. If you want to go on to jump on Discord, there's a bunch that could be good. I know KT has a Discord. So again, and doing it in a systematic fashion, I mean, you want to learn from this, right? No one's going to be perfect, but like KT said, if you document or journal some of the moves that you're making, you can learn from it and understand the mistakes you're making. So I think this is a very deep question. I think we can go on this for quite some time, but I think it's a very important question, important for everyone to kind of understand that for themselves. So Incognito, does that help answer it a little bit?
Yeah, thanks so much. You said you pinned the tweet of the YouTube series. I'm trying to look for it, but I haven't just seen it.
What kit are you looking for, KT? Do you know what kit?
You said you're going to pin it, the YouTube series, like the starter, or what you talked about. You said you're going to pin something.
Sorry, I mean,
the recorded session you
had.
had.
The recorded session, yes. It's on YouTube, and it's pinned above. You see the top of the spaces, you can see a bunch of tweets if you scroll on them. It's the second pin. It says Happy New Year's, we wish everyone a great year.
Oh, okay.
If you click into that, you'll see a bunch of tweets under it, and it'll tell you the topic, and who the speaker was, and it gives you a link to YouTube. So I would say the third link, it's dated December 12th, and the subject is auto options, trading strategies, and hedging techniques. Luka, myself, Tony, and KT were on it, so you can click on that and go. It'll take you right to YouTube, and you can listen to that recording as well. So that'll give you kind of some of the stuff we touched on today, right now, but in a much more elaborated fashion.
Okay. Thank you so much.
You're welcome. And I guess that's a general kind of Twitter 101 for everyone. We have a bunch of pinned above, so all these tweets are pretty helpful. I'd encourage everyone to look through them. It's a lot of different topics that we're covering, or threads that will help with different questions that you're asking, and so on and so forth. So thanks for coming up, Ignanito. Hopefully that answered your question. Chubbs, did you have a question?
Yeah, I wanted to kind of pick your brain and touch on the market as a general. Right now, it feels kind of reminiscent of that little tech stock bubble we had in 2020, right after the large COVID dip, when tech stocks were going insane, and then retail investors got trapped at the top, and then tech stocks plummeted for a bit and then rebounded really hard. Do you think the opening to 2022 is kind of a retail trap in a sense, where we're coming off this all-time high, and it looks really great to get in for retail investors, but larger investors and institutions are looking to, kind of offset some risk and, gain a position later in the year?
That's a really good question. I think you're talking about March 20. We dipped. We rallied hard into July 2020. I think Apple and Tesla were big drivers in that. They actually ended up having a stock split in August 2020, and then they both dipped, and the market dipped about 20 to 30% that September, and including big tech was the to correct. And I think everyone is waiting for big tech to correct right now, right? I think that's the general thesis of the question. And it's a good one, right? So I think there's no crystal ball to this. I think, as you mentioned, institutions are selling, I guess, the rate sensitive stocks, but then they're moving that money. I mean, these moves that you're seeing in Apple and Tesla, this is not just, it's not retail participation, right? I mean, I think if anything, retail has been more scared off in the past year and a half more than ever, because what you've seen since November has been a massive drop in many of these growth stocks that retail has accumulated over the past couple of years, right? I actually would argue most of retail doesn't even own some of these big tech stocks, except Tesla being the kind of uh, uh, like example out of that equation. But I would say retail, like, I mean, I don't know that many people that own Apple or Amazon. I mean, people talk about it, but I mean, I've been made fun of for owning Apple for so many years, given my age. So I really don't know if retail is part of that trade as much as you'd like to think so. I think it's a lot more institutional. I think it's being used as a bond, almost as a proxy to hold cash, because people don't know where we're moving next. And I think part of that's driven by the Fed. But this question overall is, I think I mean, it's a perfect summary of what's kind of been going on for the past 2 months. KT, I know you look into big tech pretty heavily. I think that's pretty much all you trade. What's your kind of take on this?
About the big tech correcting, Rahul?
Big tech correcting, or what's the flow's been like the past, I'd say, couple of months, because I think we've seen this big tech kind of hold out the market, right? Pretty much for 2 months. That's pretty much what's happened.
Yeah, so something that everybody has to understand is there's two types of corrections in the market. One is correction through time, and the other is correction through price, right? So what generally we see with respect to big tech is correction through time. What that means is, go look up Amazon's chart from last year. You'll see an elongated pattern on Amazon where it has not. I think it has moved about 2% the whole of last year. That's exactly what happens when big tech is correcting, and that is called correction through time. And what exactly happens there is money taken off, a chunk of it taken off at the start of the year at a certain point of time. I'm not saying start of the year, but like at some point of time, and you won't see massive inflows into Amazon or things like that, but into that particular stock. So that's exactly what happens when big tech is correcting through time. And yeah, like Apple, Tesla, they did have that massive growth, especially Apple, from 1 trillion from May 2020, March 2020, to 3 trillion now. I think it's basically because of that high liquidity and things like that. And again, we can see something like a correction through time. That's exactly what I think we will see in 2022, 2023, and first half of 2023 at least. So and will there be any pullbacks? Absolutely, there will be pullbacks. Again, Amazon is your classic example from last year that you can learn, where it dipped, it ripped, it dipped, it ripped. At the end of the year, it will be flat, but throughout the year you can trade Amazon we at least got like 7 to 8 trades which were like 10x every single time. We kind of like held, like, caught the trade on the weekly time frame. And when they and you will see that with Apple, Tesla, everything. And then there's this bull bear kind of fight on FinFit, where like, bulls can't survive without bears can't survive without bulls. But at the same time, like people would be like, oh, I this is the top on Tesla, I talked about this. And then by the end of the year, Tesla will just sit right there at that spot, but nobody really cares, because they have already forgotten that someone just called that, and it went down and came right back up. So there will be correction through time. That's exactly what I'm expecting in 2022. I don't think there will be a COVID style huge dip that we will see. Probably, maybe, SPX 4600, 4650. That is something that I can expect, but I really can't expect for 4,000 on SPX. That's something that might be absurd. And Apple also, if Apple goes back to 100, I'm loading back Apple again. That's how good that dip will be. So nobody will want to give off that opportunity to load on these high growth names and high penetrated names into the market, and free cash flow and things like that. Like, there's almost no risk, at least from how I see Apple or Microsoft or Amazon, Google, Facebook. at some point Tesla also, right? Like I literally see no risk. Like if there is a COVID style dip again in the market.
Yeah, I would see if Apple dipped at that level. I mean, people would flip. I think to just run by that one. Yeah, again, not a perfect answer, but I think this is something that many of us are watching. So thanks for bringing that up, Chubbs. There's someone that's been requesting
I
more
appreciate you
Dante.
guys' time.
You're welcome. More Dante 2K. I'm trying to get you up to speak, but I don't know if it's your technical connection or something. Hold on, I think we have another question. Ahmed, what's up, Ahmed?
Hey, thanks for having me on. Just a quick question. I enjoy the dialogue around stocks and stuff like that. I enjoy trading commodities, more specifically natural gas. Just wondering, what's a good source of info on Twitter for that?
Great question. I actually don't trade that market at all. I don't know if KT or Jeremy Lin might even know. I know he looks into stuff pretty deep overall.
I do remember one. I'm trying to look for it right now. Report back if I find it.
Thanks.
Anyone?
Hey, can you hear me?
Yeah, TST. What's up?
So, Jay from Special Situations Research. If you can't find the Special Sits Research Twitter, send me a message and I'll send you over to his Twitter profile.
Yeah, he's really good with energy. You're right.
Yeah, he's really knowledgeable, and not only that, is he's a great follow himself, by the way. But he will also direct you to, I would say, a dozen or so really good commodity trading Twitter accounts. Yeah, so Jay at his Twitter handle is at Special Sits Research or Special Situations Research.
I think it's Special Situation News, but yeah, his research arm is called Special Situations Research. You're right there. I'll just give you the handle right now. It's Special Sits with an S, News with an S. That's the handle. Hopefully that helps, Ahmed.
Perfect. Thank you. Appreciate it.
You're welcome. Yeah, no worries. Talking about people to follow, again, we do these pretty often, so definitely give all the panelists a follow. Just a shout out to Jeremy Lin as well. I mean, we haven't asked him to jump on, but he shares a lot of good content. You have TSDR.
Yeah, I actually found the trader, by the way.
Did you? Yeah.
Share
the name?
Yeah, his name's Rory_Johnston. I see Jay follows him too. He posts a lot of stuff like strictly about commodities, so he's a good follow if you're trying to look into that stuff.
Awesome.
Perfect. Thank you.
You're welcome. Thanks a lot for coming on. I see we have a few more questions trickling in. I also see we have CEO pounding the table, Avi Mash, joining. What's going on, Avi?
Tubman, man. You know how it goes.
Yeah, you tell me, listen to us.
That's Tubman, man. Yeah.
Mr. Tub, definitely give Avo a follow as well. His kid's hilarious. Low key, smart man with the stops, just doesn't show it. More Dante today. Is that your name?
Hey guys. Hey, so I know there was talk about Amazon and buy now, pay later companies like Affirm. My question was around whether anyone had thoughts around Shopify as one of the leaders in the e-commerce space.
I mean, great company. I personally don't own it. A lot of people think it's still a $1 trillion company. I do like what they're doing with the Shop Pay and their investment in Stripe, as well as early adoption of NFTs. I mean, I think Toby even changed his picture a while back, which is pretty funny and cool at the same time. But in terms of investment, I honestly don't follow it much. I personally believe I missed a big run in it. So, it's a $100+ billion company, and it's not somewhere I'd rather allocate in other places. Even though I own some that are 100 million, like for example SC, but Shopify, yeah, I just never could convince myself to get in, and I feel like I missed it, but I could be completely wrong. I don't know if anyone else here.
Yeah, I was gonna jump in real quick. I think I was talking with Riley about this of potential acquisitions. I think it could be very interesting with Fiverr getting beaten down over the past few months. Could be extremely interesting to see, if they were to buy them. I don't know if they'll get the price that they want or if they're going to sell, this beaten down. But it's very interesting. Since I've used Shopify most recently for the FinTwitch shop we're building out, it's from a user perspective, it's incredible. So, I always like to invest in companies I actually use or know about as much as I can. And it's just the optionality that they have and how easy it is to use. Plus, they're going to start to get into the enterprise space. I mean, I came from MarTech space for the past 10 years or so, and it was really interesting talking to some of these large retailers that are moving from their legacy platforms on to Shopify Plus. So that's another angle I think that will start to expand here in 2022 for sure.
Great point, Avi. Thanks for being on as always. KT, I don't know if you follow Shopify or Luka. We have a bunch of questions coming in actually, so definitely want to keep things going. If we don't follow it, let's just say that.
Yeah, I mean, Shopify. I just traded, Rahul. I think e-commerce space is so vast, and there's a lot of more penetration for all the other players. Also, Amazon is definitely the leader, but there's definitely a lot of growth potential for Shopify SE and other Melly and things like that are out there. But not really a long-term investor in Shopify.
Luka, do you follow it at all?
I follow it a bit, but not enough to speak like an absolute ton on it. I will say, personally, similar to Avi, I've used Shopify actually a few times, and I've always been impressed with the product. I know the management team is pretty darn experienced. Last time I did a deep dive on that company, I really liked the management team. And then I also like the fact that Shopify is very similar in a few ways to Amazon, but one of the things that stuck out most to me was the fact that they are building out more of an ecosystem rather than just a singular platform. It's more of an ecosystem with all of which is off of it that really solve multiple solutions for the seller. So that's something I very much like when it comes to Shopify. I do take a look at its weekly chart just to get a bit technical on it, and its daily chart. And the 6-month daily isn't fantastic. The weekly, it has been trending to the upside for quite a little bit here. I'm consistently finding support at the 50 SMA. It's pretty much at that right now on the weekly chart. When it comes to the daily, it's just been chopping. Really since it's been chopping for a while now. But it's been chopping really, if you go all the way back, it was 210? Yeah, 210 of 2021. It peaked, it came down for quite a little while, and then it got right back up a few months later to right around that 1500 zone, and it's been chopping up and down since then. And in there, it did hit a high, but a lot of chop over the past 12 months on the daily chart. Hopefully we get some more direction on that. And then to just round out some quick notes here on Shopify, I bring up their earnings, and I see that between 2020 and 2021, so those 4 quarters, pretty darn solid. Q1 was a bit of a struggle, but Q4, Q2, and Q3 were solid. And then you look at Q4 2021, that was a beat. You look at Q1 2022, that was a beat. Q2 2022, because they're ahead by a year. It's kind of weird. No, 2021. I apologize. But either way, they were beating pretty consistently. And then Q3 of 2021, they missed on EPS by 36 cents, coming in at 81 cents a share. That's a bit of a worry to me. That's down 28% year over year. So I really don't know what was the cause of that, but definitely something to look into there. But then I look at revenue trends, and it's pretty much a consistent grind for quite a little bit here. I mean, I'm counting 1, 2, 3, 4, 5, 6, 6 quarters of straight year-over-year revenue growth. So I like what I'm seeing there as well. Quarter over quarter and year over year for 6 quarters in a row, revenue growth, pretty consistent. I like what I'm definitely seeing there. So overall, the trend to the upside when it comes to earnings, I like that. I want to look into that previous quarter there where they missed on EPS. But aside from that, I really do like the company. I like the ecosystem they're building when it comes to the company itself, and I like management. So those are my notes there on Shopify without getting too deep. Possibly a deep dive on that in the next month. I'll add it to my list and try to get to it.
Awesome. Thanks for sharing that, Luka. More Dante, hopefully that answers your question to a certain degree. I see you, Fana. You'll be next. I think we have Dr. Belinda. Did you have a question? Hello, Doctor. Are you there? Right. Looks like Doctor is busy with some patients. Fana, did you have a question?
All right, thank you, Ro, for letting me on. You guys are doing, man. You guys are doing a great job. I appreciate you guys so much.
Thank you. Thank you for joining. What's going on?
Not much, man. I'm a new trader. I started trading back last year, July. Like I'm telling a lot and everything. I'm telling us like like possibly, like what advice would you give, or what would your books or videos on YouTube that you recommend, as a new trader, like, because, I just don't want to jump in
Yep.
today,
No, 100%.
yeah, because I want to learn, because you guys are doing a fantastic job, sometimes if like what possible, books or videos that you guys can recommend as a new trader, watch some videos, read some books, I would really appreciate it if you guys can help me with it. Thanks.
Yeah, for sure. Well, Pounding the Table, who's hosting this, is a great resource of research. That's actually one of the first podcasts I started listening to when I discovered FinTwit. I've been investing for quite some time, so you can follow the handle for sure. We do these spaces pretty often, share charts. Another area, we touched on this literally, I think like 20 minutes ago, someone had the same question. I have a thread pinned above. It literally says lately on spaces, the general theme of questions have been around, what do I look at? I would read that. It covers a lot of simple things that I think you can learn from. The third pinned tweet above is from Pounding the Table handle. It's an archive of all the last 2 months of spaces. Specifically, I would suggest to go to the one on December 12th. We covered this topic in depth. KT, Tony, Luka did in terms of trading, hedging strategies, techniques, styles, in terms resources, tools that they use. So, but I think to put it simply, I think it's really important for you to define the type of trader you want to be. Whether that be specific industry, swing trading, options, do you want to invest and hold long term? Coming up with that definition, understanding, and really honing in on the type of stocks you want to own. Study those charts, right? Like look at them for extended periods of time. Understand the personality of a stock, as well as understanding different macro factors that affect the overall general markets. This is definitely not something you're going to learn anytime, like very quickly. It's going to
Yeah,
be a
yeah,
work in
yeah. I know
progress.
it's
A lot
something
of
like
none
you
of us
said a
are
lot.
perfect. Yep, none of us are perfect, and I think it's a great question. I think the fact that you're trying to learn is it's amazing. Like I said, the pinned tweets above the first couple are going to be super helpful for you, I think. And yeah, I don't know if anyone else. I think we have a bunch of different styled investors on this space, so feel free to jump in, Luka or KT, Avi, Jeremy Lin, TSDR.
Thanks very much, man. I appreciate it so much, man. I'll take a look at the trailer at the top.
Yep. Look at that, but I'll pass it to these guys. Feel free, let them chime in as well because all these guys have some great experience as well.
Yeah,
Man. Thank you.
I can touch on some good reads. You mentioned books. Over the past few years, I have read an awful lot. I used to hate reading. Now I absolutely love it because I'm actually interested in what I'm reading. But either way, if you're looking for some good reads, Reminiscence of a Stock Market Operator, I believe it's what it's called. That was one of the first books I read. I've read it twice. Great book. Currently reading Market Wizards. That's another one. Trade Your Way to Financial Freedom. That's another great one. The Intelligent Investor. One Up on Wall Street by Peter Lynch. Those are all fantastic books to read and take a look at. 100 Baggers is another one. Really, when it comes to reading, I have found that what I do, just to hint when it comes to these investment books, is read through them, not all at once, but kind of take them segment by segment. And then the small lessons that you learn while reading them, whether they're psychology based, technical based, whatever they are, somewhat apply them steadily. And then typically I found myself, I go back and I read it again because then I find something else. But just take it segment by segment. And if you learn something or you want to apply something that you learned throughout one of these books, just apply it slowly. Maybe apply that to your trading for a week and see what happens and see if it actually improved your trading or not. But that's a little hint, and I'll pass it over to the other traders and speakers here.
Yeah,
Thank you very much, man. I appreciate it so much. Thank you.
I'll just add and try not to piggyback on everything what they said, but there's just a wealth of information on YouTube, right? If you just search up anything. And I think the biggest thing, and I was in your shoes and still kind of consider myself a retail investor, but the best thing you can do is not just like trust one news source. I think this applies for kind of everything in life for the most part, but especially in investing, right? There's becomes like an echo chamber, especially on FinTwit, right? And you're talking to all these people on Twitter, everyone's kind of rah-rah saying the same thing. So I would always just, check Twitter. If you look, Apple, you type in the ticker symbol for Apple, see all the people talking about Apple, then check out some news sources, check out some YouTubes. Like Apple's, everyone kind of knows that stock, but especially as you dig into like what we call them like mini monsters or some of these smaller stocks that have, larger upside potential, definitely check many sources because there are people out there, unfortunately, that do, pump and dump stocks and, on stock twits or even on Twitter, et cetera. So just always check multiple sources. And then the world's your oyster, really. I mean, YouTube, especially for like learning how to do charts. I need to do more of that myself, but, definitely there's so much out there.
Thank you, Javi. I appreciate it so much, man.
Yep.
Yeah.
TSDR, go ahead, man. I
Yeah.
see your
So
Pro Trader Mike and some other questions. We'll get to you right after this.
okay, so yeah, obviously, the books and the YouTube. I mean, it's phenomenal. This in this time as a 27-year-old, it's weird to say that, but for me, the biggest thing that helped me grow to the next level and really find my edge was finding a mentor, finding a friend, someone who I respected their intelligence and their ability in the stock market, and we just began. And I just hounded them day after day. Hey, what are you seeing? Teach me something today. What did you do today? What did you learn today? I want to learn something today. Teach me something, and just hounded them. And eventually, we formed a really good friendship and relationship, and we still talk every day, for the past 2 years, and we bounce ideas off each other, and we've both grown as traders. From me reaching out and asking for a mentor, and really finding one, and they were I don't want to say friend of mine, but they were an associate, or someone I knew, and now they're one of my best friends. Because of that relationship, because we found that in common. So that was really awesome as well. So really finding a community, finding a group of friends, finding someone that you look up to, and trying to learn as much as you can from them. I also highly recommend doing that for your growth in the stock market.
Thank you very much, man. Like you said, for a mentor, like Stock Talk Weekly. He's like one of my mentors,
He's nice. He's one of the
Yeah,
best,
like
man.
that. I don't know that guy. Like he have a great passion, especially when doing technical analysis, like how we explain. Like I've never come across somebody like that.
He's one of
It's
the
just
best on
amazing.
Twitter. He was actually on the space like
Yeah, I saw
half an
he was
hour
there.
ago, but
I mean, I think he left.
he's having technical issues. He pinged me. I don't know what's going on with his phone, but we have him on spaces pretty often. I've talked to him a ton. Avi's actually gonna put him on the pod for one of the episodes. I think Avi actually something on your to do list.
Who are we talking about?
Stock Talk Weekly, the OG.
Oh yeah. We got a bunch of. For everyone that's been hitting us up, we're going to be doing another. I was out traveling, and then Tony was out traveling. Took a little break, but we're going to get back at it this year. So we'll bring some guests, and if anyone's listening that knows dope people, cool CEOs, great traders, etc., like have them reach out to us, either my DM or on the table. We definitely it's always fun to bring on guests. Like I love talking to Tony, but like it's more fun when there's a guest for sure.
Yep, awesome. Thank you for asking that question. Again, we host these spaces fairly impromptu sometimes, but some of them are planned. We actually have a cool one coming up with Brian Feraldi on Thursday, and another one on cybersecurity next week. So again, the easiest way to keep up with our spaces and the podcast and YouTubes is obviously following the handle and the rest of our speakers, just to kind of tune in to these events and these informational sessions, which is I think is super helpful. Next, I think we
Thank
have.
you guys. I'll just give everybody a follow right now. I will keep up with you guys. I appreciate it so much, man. Thank you.
Of course, no. Thanks a lot for jumping on, and thanks for asking that question. And it's
No
really
problem.
great to kind of hear from people that are just starting off. Pro Trader Mike, what's going on?
Hey, thanks for inviting me up in this space. I was listening to you before I got rubbed off, but I wanted to add some things in. I've been trading for 30 years. I've taught thousands of traders my systems in the last 10 years. I have a system for day trading and a system for swing trading, completely separate portfolios. The guy below took my thunder a little bit with the stock operator book, Reminiscence of a Stock Operator. Chapter 7, minute 140, talks about Livermore, how he bankrupted out. He was one of the greatest traders, day traders of all time back in the early 1900s when Wall Street started. And guy made millions, but then he made some bad trades, went bankrupt. In this one chapter, he talks about how he got back into day trading, how he needed a sure shot system to make his stake back because he only had one chance to do it. Talks about Bethlehem Steel, his bread and butter, his first anaconda, how at $80 he knew it would go through 100, but he couldn't make his normal move because he didn't have the wherewithal to do that. So he watched it for weeks as it climbed to 90 and 95. Once it got to 97, he ran across town to the broker's office and placed the trade. By the time he saw the tape at 98, that thing was printing 100. That's my trade play. I trade through even numbers. The positive expectancy and momentum at even numbers at 100, at 10, at 15, at 90 cents, right under the even number, it goes through every single time. I use one system. I trade through even numbers. I really don't look at charts because if the stock blows through 95 to 105, 115, for him in that book, it went to 142 the next day. Those are three big green bars higher. So I don't have to look at the chart. I could tell by price and momentum that it's going to create that. And that's how I day trade specifically for the last 10 years. And that's what I teach to people is trading through the even number due to positive expectancy and momentum.
Awesome. No, great tips there, Pro Trader, and thanks for kind of sharing that with us. And I appreciate that. 30 years in this market is not easy. I think most of us have only been in 5 to 10 years or so. So really interesting to hear that type of perspective.
Share with you my swing trading technique in a minute?
Go for it.
Cool. The number one book on Wall Street. It's called How to Make Money in Stocks, A Winning System in Good and Bad Times by William J. O'Neill. He's the editor of the Investor's Business Daily, author of that. 20 years ago, he looked at every winning stock in the history of time that ever went from 10 to 100. He found they had 7 similar characteristics, came up with an acronym called CAN-SLIM. C is current earnings per share, and I look for companies that have displayed 4 quarters of at least 50 to 100, 150% increases in earnings, quarter after quarter. The annual sales, the A part of the formula, have to be 100% quarter after quarter, and analysts increasing estimates for the next 2 years. So I know the next couple of quarters will come in stronger than the previous quarters, exponentially putting up the stock price. The end part of the formula, there's something new going on. There's a new CEO. There's a new high in price. Is the leader. You have to have a stock as a leader within the group that you're trading. I is institutional sponsorship, and M is market momentum. And if you've got a stock that fits these 7 characteristics, you can never be out of the market because those are the fastest growing companies in America, and they'll always be hitting the scene doing well in the market. And that's my formula for swing trading.
Very, really well articulated there. Thanks a lot, Pro Trader, and feel free to stay up if you'd like.
Thanks for having me.
And thanks for that. No, of course. Thanks a lot. Sparky, did you have a question?
Yeah, hey, what's going on, guys? Hey, Pro Trader, I appreciate those 2 titles, man, on those books. And I think for people that are new to the market, I think it's to get you a couple good books and a couple good reads to kind of just get you on the right foot. But I just kind of curious what maybe Ro, your thoughts, or Pro Trader, for anybody up here, is on just on the broader markets. I know 2021 was a rough year for the for the Russell, the Nasdaq, OTC. Maybe just what's your guys' thoughts on a rotation, but potentially in Q2, on the Nasdaq. I just want to kind of get your guys' thoughts on that. So with that, I appreciate the opportunity to even come up and ask a question. So I feel like a minnow swimming with the sharks up here. So thanks, guys.
Not at all. All of us are just trying to learn and share our knowledge. I've been talking for a while, so I could answer that question, but I'd love to hear from KT or TSTR or Jeremy Lin. I think all of us are pretty well versed on this. Pro Trader, you can jump in as well.
Sure. Yeah, for sure. I can lay an answer on that. What I would be doing and what I have been doing for the last 10 years. I pick quality stocks that I like and I research, and I sell covered calls on them. Rather than like buying a house and renting it out, mortgage, title, craziness all over the place, I buy a stock, I sell an option on it to sell it 2 points higher or a point higher 30 days out. I bring in 10% premium, and I look to do that. And on a $20 stock, like I'll get any $20 stock, you can bring in a $2 premium or $1.50 10 times throughout the year. You reduce your cost basis to 0 in that stock.
All right. Awesome. I appreciate it. Dude, do you guys, to bridge off of my question was, at what point do you think we'll see a rotation? I mean, like usually twice a year, there's typically a rotation from, your blue chip down to the Russell, type of thing. I mean, what's your guys' thoughts on that? On the overall markets.
To be honest with you, in my opinion, I think much of this rotation has already been occurring underneath the surfaces. We've seen these higher multiple growth stocks compress over the last few months due to the fact that people are pricing in, a higher yield environment. And kind of basing off what Pro Trader said, when he was talking about he likes the stocks that have good value, I think kind of maybe what he means here is he's going to be looking at stocks and companies that have good balance sheets, a lot of cash on hand, and will be able to succeed in an environment where interest rates might be a little bit higher, so they don't have to leverage their businesses. And I definitely think this rotation continues, into the latter half of this year. Just one thing that I'm kind of looking at right here, I don't want to be of predictiveness, but I am seeing some, rises in COVID cases, over the last couple days. And a lot of analysts have predicted COVID cases to be peaking within the first week or two of the year, but it looks like this potentially might not be the case at the moment. I saw Ontario province in Canada had a partial shutdown, due to try and stop the spread here. So I'm actually going to be extremely interested to see what these Fed comments are on Thursday, if they have any data points regarding Omicron. Just on a near-term perspective, if they do say that the effects of Omicron on the market are, much uncertain, that actually is sort of in this boat where bad is good and good is bad, and you might see some of these higher beta mid and small cap names start to catch a bid if that were to be the case. I don't want to be a predictive reasoning whatsoever, but it's just a narrative that I think does have some validity heading into the latter half of this week. But that's my overall perspective, I'd say.
And one thing to piggyback off that, Jake from TrendSpider had posted something. I'm going to go try to find it in his feed, and then I'll take it to the nest. Referring to rate hikes and how the market performs during that. What the year or the month that the rate hikes actually occur, the market actually does fairly decent because you got to remember the market's forward looking, and a lot of policy is already baked in. To the stocks, and looking back at 2021 with how all these growth stocks have performed, we're ending the year at 45% of stocks above their 200-day moving average, coming off from a lows of around 20% in October or November of stocks above their 200-day moving average. One could argue that these interest rate hikes, a couple of them in 2022, which are, a lot of people were predicting the early part of 2023 for the first ones. But one could argue that these are already priced in to a lot of these growth stocks. And, as they occur, we could see some rotation back into there. Just a thought.
Hey guys.
Yeah, I was going to say the same thing, that it really kind of depends on the future comments we get from the Fed. I think a lot of it has been priced into the rate sensitive stocks. If you look at the growth stocks that have fell 40, 50, 60% in the past, I'd say, month. So it's certainly been a big drawdown, and I think the rotation out of big tech is probably the next thing that people are trying to eye down. And I think it really just depends on what happens with rates, Omicron, as well as, Build Back Better technically got delayed till March, so who knows what happens with that. So I think macroeconomically and just inflation, just seeing if that can slow down or not. So it's hard to predict when these things are going to rotate in and out of specific, sectors, but something to kind of keep an eye on and watch for sure. So hopefully that answers your question. Patent pending .eth. Did you have a question?
Hey, how are you? I have a question, and I kind of have a comment on the conversation we were just having. First of all, thank you for putting all this together. Can you hear me?
Yep, we can. What's up?
Okay, awesome. So regarding the markets and rotations, the speaker before me was talking about that the market has already priced in about 3 rate hikes, and I do tend to agree with that. I think my prediction would be that the rate hikes that we're going to have aren't necessarily meaningful, but regardless, any rate hike is going to increase the cost of borrowing money. So a lot of these businesses, specifically tech stocks, that business model is dependent on borrowing more money. They're not going to be able to borrow as much. So I think we're going to have some sort of contraction in these tech stocks. But then as interest rates rise, we'll probably have an increase in stocks that can increase their value or their prices. So these are like a lot of the commodity stocks. So I'm looking towards commodity stocks and banks as being winners in this next quarter. So just want to ask, what do you think about that?
Yeah, I mean, with rate hikes, the biggest winners are financials, right? So that's definitely going to be I guess a good prediction to make. And growth stocks, like I just mentioned, those stocks that kind of need capital to continue running or grow their businesses have already taken a hit. So you could argue that's already kind of been front ran, and like if these rate hikes come in as expected, or maybe we get one less hike, which I think a lot of people are speculating that there might only be two instead of three. And if that happens, and I think Jeremy Lin mentioned this earlier on the call here, is if the Fed turns its tone even slightly dovish, I think the markets take that as a bullish sign because we've priced in kind of everything the Fed possibly has said. Literally since November, it's been 2 months, and we've kind of know this information now. I mean,
Right.
it's going to be hard for the Fed to surprise us negatively. I feel. Again, that's just my 2 cents, though.
No, I totally agree with. Are there any bank stocks that you're looking at particularly? I think I was looking at Goldman Sachs and J.P. Morgan and Bank of America. Um, do you want to add to that, or do you
Personally,
think any of those?
no, personally for me, I don't touch financials, energy, materials. These are just not sectors I tend to invest in. My investing style is more only in I would say more emerging trends, so EVs, fintech, e-commerce, things of that nature, and crypto. So personally, I am not allocating any money to any type of financials as of yet. Maybe I might change my mind. It's just not a sector I tend to
Yeah.
really study in depth enough to really allocate towards that. And I also hate following things that are kind of obvious, right? So like people are going to assume that if rate hikes happen, financials benefit right away. So let's go and find a trade there. And I think things are that obvious. It's never that easy to trade, even though it looks very simple. So that's just my 2 cents. Again, I could be completely wrong. Just not a sector I personally look into that in depth. I do know special situations, Jay, pretty well versed in that sector as well. And just overall, kind of all these different sectors and kind of that FinTwit doesn't really follow as much. I know he looks into that a lot more. But I don't know if anyone else on the panel is looking at any financials.
Yeah, I mean, kind of just a broader take on it. I think you want to be looking more so at the creditor banks that have multiple segmentations, like your J.P. Morgans, your Bank of Americas, your Goldman Sachs, and maybe skew a little bit away from the investment banks that operate a little more capital intensively. A lot of their revenues over the last year, there was a report that came out. It was through M&A activity, which is obviously catalyzed by a low interest rate environment where they can take on more loans and it gives them more capital intensification properties. So yeah, that would just be my initial take on it. I also don't really look at banks too often. There was a good time to trade them, in the middle half of last year. And that definitely could become a narrative in the market again. But as of right now, they haven't been on my top watch.
What about the energy sector? And I appreciate both y'all's honesty. Really, like y'all have given really honest answers, at least to me. So I do appreciate that.
So
All right.
one thing about the energy sector. This isn't specific, I guess, to the energy sector. But for me, from a trader's perspective, it's very rare that the same thing or the same theme is hot 2 years in a row or over the course of 2 years. And last year, I mean, we saw these energy and oil names perform incredibly well with Devon Energy being up, I think, 83%, one of the top five leaders in S&P for the year. So, I mean, that's kind of my main thoughts on energy, that a lot of the gains that were to be made were made last year opposed to this year. But I do think there is a phenomenal opportunity in financials this year. One that I'm in XLF. That's my main exposure to it. Other than that, I do hold some Schwab, SCHW. I think that one flies under the radar significantly, and I think it's one of the best financial value plays out there. Is Schwab.
Yeah, I think my best winner in the energy sector last year was LPI, Laredo Petroleum. I want to say that I bought it at $18, and today I think it's trading at like $60 or something. That was my best. That was my best winner, but I also had some losers. So, but either way, I won't take up more of your time. I really do appreciate all the content. I'm gonna step back and listen. But thank you.
Well done on
Thank you.
LPI. That was a beautiful trade last year.
Thank you. Thank you. Y'all have a great night. I'll be listening in the background.
Yep. Thank you. Thank you, Pending, for asking. Rusty, did you have a question?
Yeah, hey guys, thanks for taking the time to listen to me. So real quick, I kind of focus on systematic market risk. I kind of look at the macro view of the market, and what I'm seeing right now, one of the big movements here could be happening on Monday. Right now, Alabama is a +3 favorite against Georgia, and if this does happen, and if Alabama does not cover the spread, I am worried this could crash the market because in the past, when Alabama does not perform well, the market also crashes. So I just want you to guys keep a lookout for this. All right.
Roll Tide.
Is this like actually a thing? Like,
Wait, is it serious or just a joke? The dude left too after saying that.
I'm pretty sure it was a joke.
that's got to be, yeah. Georgia's defense is looking strong, though. I don't know.
You can't bet against the SEC. Someone in the SEC is going to win.
Wow, that was a nice little end to our spaces. Do we want to take one more? I see we have one more question coming as I was about to wrap. All right, let's just take it. Drew. Hey, Drew.
Yo, what's good? Can you hear me?
How's it going, man?
What's up, bro? Appreciate you having me in here. Hey, is AO in here?
Unfortunately, no. We're all looking for him. He might be lost in Colorado. Avo predicts he got eaten by a snow monster. So if you have any insights where he is, let us know.
Dude, I know for one thing, he's definitely in 5D right now, bro. But I was just trying to get his take on Goldman Sachs. I know he's a huge Goldman guy. But yeah, if he's not here, he's definitely in outer space. But all right, guys, I love you. Bye.
Yeah, sorry, unfortunately, no Tony, no AO, but we'll convey this question to him. Luka, if you want to note it. Thanks for asking, Drew. Appreciated it, and thanks for the question. All right, so I guess with that, we've been going for almost 2 hours now. I'm happy to kind of call it here. Again, thank you everyone for joining in and listening to our spaces. Give everyone on the panel a follow as well. So you have KT, Luka, Pro Trader with a nice little wealth of knowledge that jumped in recently, TSDR, Jeremy Lin, and of course, follow table. I didn't realize I actually got pretty close to 9K during the space, so if you enjoy listening from me, definitely give me a follow as well. Maybe you can be number 9K. But I'm just kidding. Thank you everyone for joining, and thanks a lot for listening in. And we'll be doing this pretty often. Our next space is January 6th with Brian Feraldi. So that's flyer and link is on the Pounding the Table handle as well. So thanks again. Thanks everyone.
Thanks, Rahul, man. Appreciate you.
Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a big move. Big money, big